Well, good morning all. It's Friday and it's been a long week. We've had a good week and all sorts of interesting numbers coming out from the markets. We've seen inflation coming down, CPI and PPI, and a massive surge in the markets, about 11% on the Nasdaq and somewhere around maybe 10% on the S&P. So huge moves on the market. And now today at the end of the week, we're wondering if this is going to continue or if we're going to just start to slow down and slide down a bit again and correct off some of that exuberance and froth that's been building up during this last week or so. So it's going to be an interesting day. Will it be a free fall Friday, or are we going to see the markets carry on? Now, we've got some good positions going on. We're short on the dollar yen, we're long on gold, we've just gone long on oil, we're long on natural gas, and we're short on cocoa, we're short on sugar, and a couple of other things as well. I'm just wondering, oh yes, uranium. We're long on URA and short on UEC. That's a bit of a mixed bag, but turning out pretty well so far. So it's going to be an interesting day. I'm going to show you a couple of the charts that I'm looking at and some of the positions that we're in. We've got a fantastic long position on gold, an amazing short position on dollar yen, and we're just edging into a couple of these energy plays now, natural gas and WTI. Maybe time for these to go up again. I don't know. But we've got long positions on both of those. And we've also had long positions on the euro and the pound. We've taken profit on some of those. So a real mixed bag this last week, and but we've done well. So let's just go back to the office and I'll go through one or two of the plays that we've got on, including natural gas and oil. And we'll look at gold and we'll look at the dollar yen. And perhaps we'll have a look at one or two stocks as well. So let's go back to the office and check those out. I'm walking back the other way now. I just had a quick thought on the way back to the office. The 10-year yield and the dollar, those have come off dramatically. I'm going to show you what those charts look like, but it looks like really that the dollar has got some correction to do, and that will definitely aid the stock markets, and it will aid gold and a few of the other things. And so we're seeing some firmness in the other currencies against the dollar as well. And I suspect dollar weakness will trickle into some of the commodities and give them a little bit of a prop. Not necessarily the grains and the soft, but probably the energy stocks and gold. So oil and gold, they always go together, and so we're long on both of those at the moment. Anyway, enough talking and walking along the beach. Let's go back to the office and have a look. So folks, let's just run through these. I don't want to spend a lot of time. It is Friday after all. So we'll start from the left-hand tab. This is the Forex majors. Here's the euro and the pound. We were long on the euro. We just got stopped out at break even on that last spike down. And we're still long the pound. We're generally hoping for the dollar index to come off and for these other currencies to get a bit of a boost underneath them. That includes the euro and the pound. We got, as I said, we got stopped out of the euro narrowly, but we took some profit on that. And we're long on the pound and then short the dollar yen. Now this has been a fantastic trade because we've got short positions all the way from 151.60 and a whole bunch of short positions down here. You will have seen the positions that we're in that earlier clip in the earlier part of the video. You can see we're layered down from 151.60 all the way down, and all of our trade positions are now in profit. So just looking at stocks, I think we may be in a little bit of a pickle here because we were hoping for a pullback yesterday. We didn't get it. And we're short on Nasdaq and Nvidia and Microsoft, and now Apple. We took a very small short position yesterday. I don't know if these markets are going to come in. They're certainly due for a pullback, but we've definitely got a bullish market going on. I think that overall these markets are going to new all-time highs, but it's not going to get there all at once, obviously. So we're going to need some retraction, some pullback, some consolidation at some stage. And whether we'll get that this week or not, I don't know. There are some that are calling for a massive reversal this week. In other words, for all the stocks to come down quite dramatically, and that would be today, really. And that's not all the retail traders who have just got short. There appear to be a lot of hedge funds and institutional traders who are also looking at shorts on these markets. So today's really going to tell, are we going to get a big wick top on the weekly chart? Is that wick top from a couple of days ago going to hold on Nasdaq? Are we going to hold beneath there? If we switch to the weekly chart, you can see we're right up against that very, very key resistance, but approaching it firmly after having formed what seems to have been a bullish flag pattern, as you can see there from that channel I've just drawn in. So it all looks pretty bullish, but we'll have to wait to see how today deals with this resistance level and whether we're going to get a continuation or a big wick high spike top candle on the weekly chart, this chart, and a move back down. I don't know, but I think we're going to have to at some stage test this weekly 20-period moving average, from which we've pulled away a fair distance, and it would make sense to back test the top of this channel that we broke out from recently. I think today is going to be incredibly important, particularly as the market digests all this economic data and considers whether the fund's done with rate hikes altogether, probably, and whether they're going to be tempted into doing early cuts, probably not. But I think the market's starting to look along those lines already and beginning to digest all of this information. Not only that, but also all the negative economic information and reports that we've been getting on various other fronts. And perhaps today is going to be a sort of a decision point on all of that available data. And maybe the market will return to some sort of efficiency when it comes to pricing in factors that should be negatively influencing the markets. And we'll be watching across these charts. I've got the NASDAQ and the S&P and some of the tech stocks, Magnificent Seven. I don't have a lot of the lower cap stocks on here and I don't trade them much, but you will have noticed that those got quite a big boost during this last week. And this huge rally that we've seen hasn't been confined to the Magnificent Seven, the tech stocks and the chip stocks and so on. And in fact, the strength in the tech stocks has been surpassed in many instances by strength in the smaller caps. So it's going to be an important day. We're just going to have to watch it. We are short on NASDAQ, S&P, Microsoft, Nvidia, and Apple. And those could turn out to be our losing trades today. I don't know. And then gold, we're long from 1937. We're at 1991 now, so really good trade on that. And we continue to hold that, looking for new highs on gold. There's the UEC and URA charts. We're long on URA, short on UEC. UEC's barely moved upwards, and we've got a much smaller position on UEC, a bigger position on URA. Once again, you can have a look back in this video and have a look at our actual positions on a live demo account. It's a real live account, but a small one, which I use to demonstrate my positions to my trading members. And going across to some of the commodities, we're long on natural gas. We had a pretty bearish storage report yesterday, but we just pulled back down to $3, just above $3. We're bouncing off there still now. Our position's long from 310. We're aiming for 350, 360, the top of the range, and this channel top, and eventually break out through there to $4 and above. If we don't manage to hold $3, I suspect we'll be going down to 285. I've talked about this in previous videos and I'll put a link up to that. I'm willing to add to my long position at 285. I've kept some aside for that. And if 285 fails to hold the rally, I'll be looking to hedge these positions in the high 270s. And then WTI, we've just gone long. This is my overall idea. I don't know if we're going to hold here around $73, but I'm willing to add down at $70. There's a band of support down here. And eventually I'll be looking for a move back up into perhaps $80, somewhere around there. You can see we've been stuck in this range between $90 and $70 this entire year. So there's no reason at this stage to think that we're going to break out of that range. So we should be looking to buy dips and get out of those trades and potentially sell at the tops closer to $90. We've been buying at the lows. We exited at the top. We went short. We exited down here, and now we've gone long. So we're still trading within that broader range. And then sugar, well, we're interminably short on sugar, and I'm hoping for this to break down. Again, I've covered this in previous videos. And the same thing for cocoa. We're short on cocoa. This chart's the London cocoa futures. I could put the US cocoa futures on here. You'll see the chart's pretty similar, except we haven't broken out of the top of the range as many times as we did with the London cocoa, and we also formed a much bigger reversal. So we've just bounced up a little bit, consolidating some of those losses, and I expect that we'll try and hold beneath somewhere around about 4050, the top of this wick and the top of this previous candle, and then begin to move lower, and you can see the path that I've got in mind for that. Going back to the London cocoa, the one we're actually trading, you can see a similar pattern, but the channel's not nearly as neat. We've had a few breakouts through the top, and we've had a recent breakout through the top. And that's the reason, because I like this one, because that could turn out to be a false break. So we've gone short on this recently. We've just rallied back up to the underside of this channel, which is perfect. That's what we want to see. We want to pick up some more liquidity there. We want to solidify this position and then see a strong move down. So we're short on London cocoa futures, and we're short on sugar. We're long on WTI. We're long on natural gas. We don't have a position on Bitcoin, and the US 10-year yield continues to move lower. The only other position I have on at the moment is long pound South African rand, and that's been going sideways for a number of days, a couple of weeks now, not moving up. But generally, whenever I get a chance to buy on dips, whether it's the dollar rand or the pound rand, I grab those opportunities, and that's what I've done in this case. And sometimes it takes a number of days and weeks for this to find a footing, but eventually I expect to move up back through these moving averages, the 200, the 50, the 100, and then these trend lines, which I've got drawn on there, very short-term trend lines. So that's it for today, folks. It's Friday, and I'm happy with all my positions. The only ones I'm worried about are these stock trades, short NASDAQ, S&P, Microsoft, Nvidia, and Apple. And I think these might be the trades that annoy us the most today, and I can see that this market could continue to surge higher. We'll have to wait and see. If you've enjoyed this content, please give the video a thumbs up and consider subscribing to the channel. I'd really appreciate it. It all helps the channel grow. Take care, have a great trading day and a great weekend ahead of you.